Welcome back, fellow value investors. In this video, I'm going to analyze Perdoceo. This is a small cap company that focuses on higher education. What makes them different is they do a lot of distance learning for their students. For people that have full-time jobs and have to go to school part-time, or maybe make it convenient, they have to educate themselves without leaving their homes. Perduceo's been really offering a lot of curriculum for that student and giving people a way to get educated, earn degrees, and improve their lives. It's a company that's also making money and generating a lot of free cash flow, and that really caught my attention. I'm going to evaluate Perdoceo, let you know what I think the company is worth. I'll also let you know if I'm going to intend on buying more shares, if I'm just going to hold the shares that I own, or if I'm going to sell the shares in this company. Do me a favor and like my video and subscribe to my channel. And also, please leave a comment on this company. I'd love to hear what you think. I'm going to evaluate this company looking at three principal areas. Most importantly is the company. I don't want to invest in a company that I don't believe in. I have to like the business. I want to be a part owner in the business, and I want to know that I like the management team and I like the industry. So a lot of attention to the company, its industry, its management team. I want to look at the balance sheet, make sure the debt's under control and less than 3 times EBITDA. And I want to discount the stock. I'm a value investor. I buy stocks when they're discounted. And based on the answers that I get, I will buy, hold, or sell this company. A lot of industries have to really change. They have to innovate. They have to adapt to the modern times. And I would say that higher education might be a little slow to adapt, especially these big universities, big state universities. These are really big institutions. And don't get me wrong, I think they're great. I think they educate a lot of people. And I was educated here in California by the Cal State system. So I'm very fortunate and grateful that they educated me. But there's a lot of people that would rather go online and earn their degree. There's also people that have to work, and it makes it very hard for them maybe to drive across a city or maybe drive an hour to get to school and then go home, do their homework, and then go to work the next day. So it'd be far easier if they can do it at home or somewhere where they have a high-speed internet connection. And Perdoceo has been really focused on distance learning. So it makes it very modern to the student that wants to do it over the internet. It also makes it less expensive, more profitable for the company that's actually providing the education. So all those factors, I think, benefit this company and make them, I think, more competitive than their rival institutions that are very big and really serve predominantly on-campus students. The company has two big divisions, Colorado Technical University Division, and then the American Intercontinental University System. The bigger of the two is the Colorado Technical University System. It has brands like Colorado Technical University, Hippo Education, and Coding Dojo. This is really focused on technology-based education and getting people to take jobs in technology. Very good. It's the bigger of the two different divisions. They have 25,900 total enrolled students. They have 2 on-site campuses, but most of the education is done online. So it makes it convenient for the student, less expensive for the university. The other university division is the Intercontinental American University System, and they have 4 different schools within that division. This is the smaller of the two. They have 12,100 students, and again, primarily online. This particular company likes to educate people and get them ready for a particular job. So most of what you get educated in this system prepares you to be a nurse, to be an IT professional, to be able to code and work somewhere developing software, or maybe even AI. So I like their curriculum. I like that they do primarily online, which fits the modern times. And I like that they really focus on what is being demanded by the workforce, by students, and that's what they focus on educating students in. So let's take a look at the type of student that attends their college typically. Students tend to be a little older. 68% of them are over 30 years old. And then there's a category of 21 to 30. So a majority of students are adult students. It's not people that are just graduating high school and going straight to college. Most of them are earning a bachelor's degree, 68%, and some are earning an associate's degree. The types of degrees that are being earned: business studies and information technology, as well as health education, so nursing and so forth. So these are very occupational related degrees. So people are going to better their earning potential. Maybe students are using their employers continuing education benefits that a lot of employers provide, and you use those resources to attend one of their colleges here and earn a degree online. So I think they're really tapping into a population within the United States that wants to be educated, but they just need it done a little differently, done online, done at their pace. And this is a more an older audience that is going to their colleges. So I think this company is different. It's not just like any other university. They are different. They really want to be primarily an online learning university. They want to be flexible. So mostly their students are adults. So they have families, they have jobs. They use a lot of technology. Now that's probably similar to most universities, but these guys go that extra step doing online education. And now they're going to bring in artificial intelligence. And they really focus on what's marketable. Let's educate these students so when they get done with their degree, they have a job waiting for them in business, in IT, or in healthcare. Let's look at their investment thesis. First, they want to establish a growing online platform. So they really want this online business, this online education business to really thrive. That's their principal goal. I like that. They're going to be using AI to really enhance the education process. That makes a lot of sense. I think if they provide AI to students so they can ask a lot of questions around particular topics, that student can learn much faster if they get the answers that much quicker. And if the company builds a large language model around the subjects that students need help with. They have a strong balance sheet and really focus on the return of invested capital. Very good. And no debt. They carry no debt on the balance sheet. That's very good. They also want to partner with the stockholder by buying back shares and paying a dividend. Now, one item of concern is they had to basically bring back their previous CEO because the existing CEO resigned. I don't think the person was working out. And that's a concern because they had a change of the guard. That person didn't work out. The CEO that was previously in the role came back, but he's probably not going to be there permanently. They're probably going to need to find another CEO to take over. So we'll see how that sorts itself out. But it is an item that concerns me. Perdoceo has been growing their revenue. I'm looking at the trailing 12 months, and you can see that their revenue is growing. Not a ton, but it continues to grow. I like that. The other thing I like is they're profitable. Profitable with some growth is excellent. I'd like to look at earnings per share. That's another metric that I use for valuing the company. And one website, stock analysis website, stockanalysis.com, has their earnings per share next year at $2.14. And CNBC has it effectively at $2.06, not too far apart. So I'm going to take the middle point of the two. I'm also going to look at the forward PE for Perdoceo. I'm not going to take the forward PC that's listed on CNBC. That's too high. But I'm going to go way above the 8 that they have done for the trailing 12 months. I think they deserve a higher PE. They're growing, they're profitable, and they generate free cash flow. And their cash flow is really good. They generate really good cash flow. Free cash flow, trailing 12 months, 131 million. So that's very good for a company their size and their market cap. So I'm going to use that free cash flow in the valuation of the company. I take two techniques, free cash flow and earnings per share, to value this company. Looking at some of their ratios, they have a very low PE. It's 8.22, and I think that they deserve a higher PE. I'm going to use a higher price to earnings ratio. I think they deserve a higher price to earnings ratio. It is a small, mid-sized cap company. Their debt to EBITDA is really low. They have low debt and they produce good EBITDA. So that's very good. Their return on assets is good, 14.8%. Return on equity is 18.8%. I believe Perdoceo is heavily discounted and it offers a discount of 83%. I get there because I value the company based on the earnings per share that they're going to produce, seeing how much the company is worth based on that factor. And I also look at the free cash flows that I expect they're going to produce and then valuing those free cash flows and determining a net present value. The free cash flows for the trailing 12 months is 131 million. So that's going to be my starting point. And I'm going to grow these cash flows by 4%. And then terminal value, I'm going to grow more modestly by 2%. These are really low growth rates. I think they could do better than that, but I'm going to be conservative. The weighted average cost of capital is 9%. Interest rates are down. This is a small company, so I'm going to use a higher rate than normal. I'm going to add the cash, but there's no debt to take away. So the equity value ends up being $2.4 billion for the company. The market cap for the company is 1.1 billion. So the free cash flows just look fantastic. 113% discount if you look at how much cash this company produces. The earnings per share, I took the midway point between the two websites I visited. So it's $2.08. I'm going to use a PE of 12. It's a growing company, profitable, generating free cash. So they deserve a 12, if not higher. and then just a conservative growth rate of 3% on those earnings per share. When I take those factors and put them through my calculation to determine a value of a company using their earnings per share, I get to a value of $21.29. Current stock price is $17.45. So just using earnings per share provides a 22% discount on the stock. I blend the two, but I believe in free cash flows more than earnings per share and use 2/3 of that as a weight and 1/3 from earnings per share to get to the blended 83% discount. The debt to EBITDA is super low, so it's well below the 3, and I'm very comfortable with this company's balance sheet. Looking at where the company is traded, year to date, they're doing well, 25.63% return year to date. It's had a really nice run up at the end of the summer. Their earnings came out and investors recognize, hey, this company is valuable. It has been trading sideways, which offers an opportunity for an investor like me to come in and take a look at these shares. They pay a dividend of 2.5%. And overall, they offer a nice discount between where they're currently priced and where I value the company. So let me determine if I should buy, hold, or sell this stock. First, let's take a look at the company. Do I like the company? Do I think it's well run? Do I like the industry? And the short answer is absolutely. I really like that they're primarily online. They really focus on what types of careers are people getting jobs for, and really making the education process valuable for the student that graduates. So that's all things are good. The one small thing about management, they did replace the CEO. Now, that's not totally bad news, but it is a concerning item that I'm going to keep an eye on. The balance sheet, very low debt, well below 3 times EBITDA, and they offer a nice discount on the stock. So I'm going to be buying shares of Perdoceo. Hey, thanks for watching the video. I really appreciate it. I'd love if you could leave a comment. I'd love to read your comments on the company. I'd love to hear what you think of the company. And please like my video and subscribe to my channel. I'd really appreciate that. Good luck investing and happy holidays.